Hello guys, TGIF. So let's begin this session. So as usual, this is our Friday session, not so structured, a little bit more chill. So if you have, during the session, if you have any question along the way, feel free to ask lah. Okay. So it is a AMA session lah, which stands for Ask Me Anything lah. Okay, but there are a few stuff going on in the market right now, which I think worth discussing. We may finally have the first weekly rate candle lah. Okay, May who who knows, towards the end of the day, like 3 a.m. in the morning, market recover. We don't know lah, but it seems that the selling pressure is coming in, and we may have that first weekly rate candle that we are looking at lah. Okay. So let's go through a few things, because right now things can be a little bit confusing. So let's just do a very quick how should I put it, macro recap lah, okay, on what are the things that is going on right now. So last week, right, there are a few stuff that happened, like cause a very big hoo-ha like that. The first one is the New York Empire State Manufacturing Index. So this is basically a manufacturing index for New York alone lah, okay, just New York by itself, not the entire United States. But it can be also representative in a way. So it is just an index that measures the growth of the manufacturing sector lah. What is their sentiment? And on August 15, right, which was last week, this Monday, it fell by, it went to negative 31. The forecast was 5.5. So between a forecast 5.5, right, and an actual result of negative 31, right, that is a very big discrepancy there, in a way that, like, are people not aware of what's going on? Like who are these people that is forecasting that you miss the actual result by so big lah? Okay, so and if it fell so low, where it is almost competing with the 2020 that rate there lah. Okay, so although this is just based on New York State alone, right, it is still something that is worth looking at lah, because it is a very tremendous drop. If you have something that dropped this much, that is like out of the bell-shaped curve, or out of the 3 standard deviation, or whatever, right, we do need to pay attention also. And on the day that this drop happened, right, the market is still in a rally mode lah. The price didn't suffer immediately. But one thing that you have to take note, right, when you are looking at all these kind of macroeconomic indicators, they are not meant for you to time the market. Okay, like you don't see this go down and then you short and then you get caught in the rally. They are not meant for you to time the market. They are just there to give you a roadmap of what is going to happen ahead. It is other stuff like technical analysis or other chart reading stuff that you time the market lah. So for example, in this case, right, if this kind of indicator is telling you that, okay, the economy is bad, but the S&P is still rallying, of course, obviously you don't go and short the market at that period lah. But eventually, right, all these macro indicators, right, they will eventually play out, because they tend to be the leading indicators, because they are like, when the economy slow down, right, it doesn't really get reflected in the stock market or in the company's earning, perhaps maybe like 3 months later, 4 months later, something like that lah. Okay, so it is a leading indicator, and the issue with leading indicator is that we don't know how much it is leading also lah. But at least it does give us a foresight of what is going on in the manufacturing sector lah. In fact, right, if we look at the ISM Manufacturing Index, this one, which you can, it is very, wait, let me pull out the investing.com one. ISM Manufacturing Index. Okay, so when you look at the ISM Manufacturing Index, right, it is something that is closely followed also, in a way where when Federal Reserve, when they project things like GDP for the coming quarter, for the coming year or whatever, right? They do look at all these kind of the ISM manufacturing index and the ISM non-manufacturing index, which is a service sector lah. And for the ISM manufacturing index, right, it has been falling since like somewhere around mid of 2021 like that. Ever since then, right, it has been slowly declining lah, and that is kind of like telling us that okay, the manufacturing sector is actually slowing down lah. Okay, so it is not so surprised to see that the New York Empire State Manufacturing Index suddenly dives so much. Maybe perhaps in the next month, this ISM might also dive lah. So this ISM manufacturing index is more of the entire US rather than just United States alone now. Okay, so it's something that is worth looking at. Also, it is updated once every month now. Okay, so so we have that going on the so-called the macroeconomy side, and we also have Target that the profit fell by 90%, which is ridiculous. But the price is still hanging on lah. The price is still hanging around there, but who know what's gonna happen today? Because yesterday the market was I think it ended green. Earlier in the day it was quite bearish, but it ended in the green now. Where's Target lah? Here. Okay, here when okay lah, when the earnings came out, it dived down a bit. It gapped down like, it open gap down, and then it end up in the doji like that. But now it does seems like this one is creating a top like that, and then now we have a general market weakness that is coming in also, which is why this counter may start to dive down already lah. Okay, so one thing I noticed about all the company earnings nowadays, right? For example, when I look at companies like Target, Apple, or I mean there are some other companies that I forgot already lah, but there is a general trend that is taking place, and that is they are not doing very well for this earnings season. The earnings that they are giving out, right, is quite disappointing. But for some reason, right, they are reiterating their year-end projection. They are saying that okay, we have a bad quarter, but don't worry, at the end of the year, we can still meet our EPS target, earning per share target. We can still meet our revenue target, not to worry. We are doing this, we are doing that. So even though they are obviously facing a lot of headwind, right? They are still kind of telling all the investors that they are fine, they can recover, they can still meet their year-end revenue target or earning target or whatever lah. Firstly, it happened in Apple, and I believe it happened in Plug Power also, which unfortunately it has been cut loss. Even though they are facing a big loss, not even earning any money at all, right? They are still reiterating their 2025 target lah. Okay, and same thing for Target also. They are still saying that they can meet the year-end goal. So I'm not sure if this is going to be like how should I put it? It was something that can bite them back when the end of the year come lah. So what happened is that market is actually rallying because like okay, they are still they like the overall the situation is very bullish. We have the Fed pivot going on, and then on top of that, right, all these companies are also saying that hey, actually we can recover, blah blah blah. But what if, right? What if towards the end of the year, actually the second half of 2022, right? Let's not talk about the stock market, but rather the overall economy situation worsened. Like inflation is still very sticky. Yes, it came down to 8.5, but what if it stagnant at 8.5? What if even though oil prices are coming down below $100 per barrel, right? What if inflation is still stuck at that 8.5 level? That is going to be a very, very bad news, because the inflation merely went down because the oil price went down. But beyond that, right? Beyond that, there are still a lot of other things that is contributing to inflation, that which is going to make it at the make it become very sticky in the sense that it is embedded already. It is not going to go away very easily lah. Okay, so if those kind of issues start to come in, right, which is quite highly likely also, it can become in a way where by the end of third quarter or even when the fourth quarter begins, right, all these companies that sort of reiterate their year-end goal, maybe they might come out to say that, hey, okay, sorry, we are not able to meet our goal because of this, because of that. So then what's going to happen is it can cause a huge dive in their stock price also lah. So this is something that we have to be very, very careful. You cannot say that the market is like very efficient, everything is in the technical, whatever. It is not like that also, because earlier part of the year, right, even if you look at Target itself, you can see that when they during this part when Walmart announced their first decline in earnings or whatever, Target also suffered. The price actually gapped down a lot, mainly because they were not expecting such a big decline in their earnings lah. Okay, that's why the price gapped down so much, and this gap down is due to the fact that the market is mispricing the price of Target in a incorrect manner. The market think that actually Target should not be so weak, but actually they mispriced, and then when Target came out and say that, okay, we are doing quite bad, then the price all the way go down. So currently right now, things are in an opposite situation where all these companies are coming out and say that, okay, we admit we are doing bad, price already gone down, but we promise things will be better. So because of that, right, most of the counters are recovering, but who knows, in the second half, things might be slightly different also. So it is not just because like we are perma bear or whatever lah, but rather all the macroeconomic indicators are pointing towards the direction. Okay, so until we see all those indicators improve towards the bullish side, right, it is quite hard to go towards more bullish buyers portfolio lah. So we have to be a little bit careful also. Just to reiterate on the spread trade, right? I think we'll be utilizing spread trade quite I would say quite often for the next few weeks. And you can see that for Google and Meta, right, even though if you are looking at the market for this week, right, even though they may be like kind of like moving together or what, right, you will realize that when price go up, Google went up more than Facebook. Then when price go down, right, Google tends to not go down as much as Facebook. So in that manner, right, you are able to profit from the spread between Google and Facebook, while you don't really need to care the market direction. The market go up or down, you will still earn the money between the spread. Okay, so I have actually for example, shit. You can actually monitor the spread using this this formula function. You can actually monitor this spread using Google over Meta. Okay, Google / Meta. So this is a ratio lah. So the ratio is just to agak see whether your spread is earning money or not. So for example, right, this spread trade was given to you on Saturday and Sunday. So Sunday is the actual trade setup, but if you are not familiar with spread trade, right, you are highly encouraged to go and look at the Saturday webinar, and there's a PowerPoint attached there also lah. Do get yourself familiarized with the spread trade, mainly because it is a very good tool. It's a very good tool that you can use it is something. It's like an additional skill that is added to your toolkit lah. And when in the future, right, when the situation arises, it is something that you can make use lah. Okay, so it is often used when we are at that turning point of the market. Like for example, right, like in this case, the market is going up like that, but you feel that the market is bearish. You feel that the market is quite bearish. You have no idea why this is rallying so much, but overall you feel that it is bearish. But even if you are bullish, right, it is a little bit late to long. And if you are bearish, right, it is also kind of like at the top there. So it's kind of hard to like take a long position or take a short position. So what you can do is you can actually take a spread trade. So when you place the spread trade, right, whether market go up or down doesn't matter already. The profit from your spread trade is coming from whether this stock is a stronger stock compared to the other stock, or this stock can outperform the other stock lah. Okay, so that is where your profit is coming in. So let's say if the market goes down, right, and then based on what kind of spread trade you are holding, you can actually for example, if market go down in our situation, we can actually remove the Google from our spread and end up we'll be holding a Facebook short. So although the Google will take a small loss, but the Facebook will continue to hold, and then things will start to go down. And then overall, the spread itself is still profitable, but you are also holding a Facebook short at the top there. So likewise, if market decide to go up, right? If market decide to aggressively retrace and then suddenly rally, right? You are able to hold your spread trade through this period also, mainly because your trade is not affected by how the market is moving. So for example, even if the entire market go down like this and recover later, right? It is also possible that it's also highly possible that your spread trade is probably gonna be profitable also. And when we see good indication, good evidence of market recovering, right? Then we can remove the Facebook and now you are holding the Google long, okay? Or you don't really have to like totally remove Facebook altogether. You can remove half a bit, like based on whatever situation that you are facing. So it is kind of like an advanced skill, but I mean, at least now you are exposed to it, and you can kind of like play around with it, okay? So going back to the spread, right? Google versus Meta. So always remember your long position is the numerator, short position is the denominator, okay? So you can see that we enter this trade on Monday. So Monday is 15. Okay, so 15 is this red candle. So let's say we enter here, okay? So you can see that from Monday until now, right, your spread trade is actually going in your direction. Your Google long, Microsoft short is going in your direction, okay? It is going upwards, So don't really go and bother. Don't go and bother about all these numbers here, because due to the how spread trade works, right? Due to the ratio formula that we are using here, right? You won't be able to draw any kind of conclusion from these numbers, okay? But rather you are going to manually monitor your position via your brokerage platform, So for example, for me, like my trade is Google is down by -19182, Google long, and then Facebook is up by 681, Facebook is short. So when I started to put on this trade on Monday, right, both of them have similar contract price, okay? Similar contract price. I think for my case, right, Facebook is slightly higher, mainly because I want to adjust to the volatility. So Facebook is about 1.1 times higher. It's not a big amount, just slightly higher only. So you can see that like the market can go up or down, whatever it is. But if you are able to correctly identify which is the strong counter, which is the weak counter, right, you will be able to get the spread profit. Okay, so right now, $500 may not seem much, but the thing is that you are protected from market risk and sector risk. It doesn't matter whether the entire sector breakdown, like for example, maybe one day Snapchat come out and say that, oh, okay, they feel that the whole online advertising business is like gone case ready, everything crash, right? You are not subjected to that sector risk also, mainly because you have Facebook short. Even though your Google is long, right, you have Facebook short. So when these two dive, right, due to whatever bad news that is related to the sector, it is highly likely that Facebook is going to drop a lot more than Google, and you are still profitable from that side. And then on the other end, right, if let's say things are going to be very bullish, everything start to go up, right? If Google is indeed a stronger company, most likely Google will end up going up a lot higher than Facebook also. So from there, you will be able to earn the spread also. But one thing you have to take note is that it is not it is not a license for you to go and anyhow just open long short, and then like just like think that it's a spread trade lah. Okay, you do have to be careful because you have to truly do your homework and really pick out the correct the correct long against the correct short lah. Okay, if you do not do your homework and then you just simply on the top of your head you think that okay, this company very strong because my friend worked there, like and the CEO good, and then you go and long that counter, and then you go and short another counter because you read somewhere in Facebook someone say something about that, then you go and short the counter. If you do that kind of spread, right, then obviously it's not gonna work out. Okay, so do be careful. So currently, right, currently we have one spread trade on Google and Meta Short right now. Unfortunately, right, Spotify is heading down right now. So even though it has not hit the stop loss yet for Spotify, right, I am considering attaching a short position to this, but this is slightly, I would say, an unusual case because most of the time, right, spread trade we enter both of the trade together lah. Okay, simply for easier management lah. But in this case, right, for Spotify, it haven't hit the stop loss yet, and it is not that close to stop loss yet. Also, it is somewhere at like I wasn't say midway lah. Okay, slightly more than midway really, but it is still possible to attach a spread trade to it. For example, you can consider additional lots of Facebook short to attach to Spotify lah, which is something that we went through on Saturday also. So if you do that, right, what's gonna happen is that you can remove your Spotify stop loss altogether. You can just monitor the spread trade as a whole, meaning for example, as mentioned, right, you are going to look at the stop loss for your spread trade is like 3% of your total portfolio lah. Okay, so your Spotify long and Facebook short, the P&L between the spread, if it hits 3% of your portfolio, then you exit both of the position together. Okay, but because you are entering Facebook late into this spread, Spotify already ran, right, your spread is going to start off at negative value lah, meaning whatever negative position that your Spotify holding, you are going to start off your spread at that value lah. So for example, right, I already have negative 1,500 for Spotify. Currently this is my running P&L lah. Okay, so if I add another Facebook short to pair it up with Spotify, right, what's gonna happen is that this Spotify and Facebook spread, it is gonna start off at negative 1,005. So let's say my stop loss, my risk, I can risk 2,005, right? Meaning I only have another $1,000 more to go lah. So if Spotify continue to go down, you better sort of hope that Facebook is going down even more lah, to sort of cover that up lah. Okay, or let's say if things start to recover, right, hopefully Spotify will go up more than Facebook. So it is the same issue, same theory as Meta and Facebook and Google lah. The only difference is that in this spread, right, you are dealing with existing position that is already down by this amount. Okay, so the reason why I am thinking of doing a spread trade onto Spotify is not because to avoid the stop loss, but rather we are not really sure things are going to be heading down. Okay, so you can see it suddenly went back. We are not really sure this is the top here. Okay, we are not really sure this is the top here or this is the bottom or whatever lah. Okay, so because of that, right, we still have a bearish bias. We don't I personally don't think that this is like a true bull rally lah. Okay, so because of that, right, I do want to protect my long with a short with a short trade to make it a spread trade lah. So if I do that right now, I have two spread trade, one Google and Spotify, one one Google and Facebook, and then Facebook and Spotify. So I had those two, right? Of course, in theory, there's only 3 positions because your Facebook is acting as double duty lah. But obviously, your Facebook need to be double the position of the both of them lah. Okay, so by having that kind of position, right, I am still able to kind of like retain my position regardless however the market is going lah, until the market become very clear, right? Then we can kind of like pick our direction lah. So if you add a Facebook short to your Spotify, what you are essentially doing is that you are kind of like locking your Spotify loss here lah. Okay, and beyond that, whatever the spread that Facebook can provide, you can either reduce your loss here, or it can kind of like give you a better holding power if things really recover lah. For example, maybe in September, right? Things are truly improving, and then when things start to recover, right? At least what's gonna happen is that yes, maybe your Facebook may be in some profit, but your Spotify may be in a bigger loss. Like for example, right? Your Spotify may be already beyond the stop loss. Your Spotify may be like beyond the stop loss somewhere here already, but because the market is going down, right? Your Facebook will obviously be in some amount of profit lah. Okay, so what you can do is when Spotify recover, you immediately take the profit on your Facebook, and then after that, it will sort of cover up whatever the loss that you are making here. And when Spotify recover and go up, right, you can ride this trend without actually exiting your position now. Okay, so that kind of mobility, right, is something that spread trade allows you to do lah. So it's something that worth considering. Actually, market open already. Okay, so do take note of that. If you want to enter your Facebook spread trade now, right, you can enter right now also. But once again, right, make sure they are in equal contract value. Okay, so you look at how much your Spotify contract is, and you enter the equal amount of Facebook short contract, so that they are like in similar contract lah. For if you have a short contract that is like twice the size of your long contract, then I mean, it doesn't make sense lah. Okay, so next, plug power. For those who are holding options, right, not shares, if you're holding shares, you are cut off already lah. But for those who are holding option, your option expire next month. I forgot which date already. Let me check. 16 September. Okay, if you are still holding the 16 September option, you can still hold. That's the good thing about option, because you don't have a stop loss. You hold until the whole contract expire lah. When it expire, right, then you either take the loss, which is equal to your risk, or you are gonna get some profit lah. Okay, so you still have like maybe more than 3 weeks to go. So if market decide to crash and this whole thing continue to go down, right, you will definitely still stand to profit lah. And one thing about options is that as it get closer to the expiry date, and if the market move very violently when you are very near your expiry, right, the option contract price can suddenly shoot up all the way one. Meaning, right, you can see an option that is like 0.22, like 20 cents like that. And then if it suddenly jump all the way down, this 20 cents can suddenly become like $10 like that within like 1 day. So don't exit your options, okay? If you have the options on contract, hold on to your options contract until the expiry date. So there's 16 Sep. Wow, thank you. Next, another thing that's happening is Bitcoin is actually crashing. Bitcoin is it jumped down by 7.3%, which is quite I would say consider a big drop lah, and it is going back towards 20K again. So Bitcoin is a very good indicator for a risk on, risk off lah, for the stock market, mainly because Bitcoin is in a way very speculative. So if a speculative instrument is like rallying like crazy, right, that means overall everything is in a risk on mode lah. But if a speculative instrument like Bitcoin is going down, right, then it is likely that we are back into a bearish mode lah. And there is a very high correlation between Bitcoin and Nasdaq also lah. So we are somewhat like back into a slightly risk off mode. So do be careful of long position. Okay, do be very careful of long position, because in terms of economy wise, right, there's nothing really supporting the long position aside from a Fed pivot lah. Okay, so and another thing is we also have the 10-year yield. The 10-year yield suddenly spike up, very crazy. So normally when the 10-year yield spike up, right, it is not very good for the stock market also, because now they tend in this current environment, they tend to have inverse correlation lah. When 10-year yield go up, stock market start to come down. Okay, so we do have all these things that is happening right now. So do be careful. And also, of course, one thing I want to mention is that regardless of whatever, like Fed pivot, inflation coming down, whatever, right, we still cannot deny the fact that inflation is still at 8.5%. Okay, this is like the white elephant that everyone is ignoring lah. So currently, if you look at oil price, right, it is at 98. Okay, it recovered a bit, but if you look at June to July, June top was like 125. Okay, July bottom is like somewhere here lah. So the price is somewhere at July's bottom lah. Okay, somewhere around July's bottom. So let's say in the next few the remaining of August, if average price of crude oil kind of like hover around $100, it didn't really, let's say it doesn't go above 100 lah, okay, or it just hang around 100, right, then it is highly likely that your CPI data for August, right, it may not be like the energy portion is not gonna play a big factor already lah, on a month-to-month basis lah. Okay, so it is something to take note also. There are some fundamental driver that is pushing down Brent crude or also lah. So it is something that is worth considering, because it does play a role in your CPI data also lah. Of course, if let's say Brent crude decide to spike up back to like 115, that area like that, right? Then I mean, then your CPI is out of the window already lah. Excuse me. And there's let's look at the Federal Reserve meeting minutes. Okay, just to see what is being discussed. So this meeting minutes happened, it happened on Wednesday. Sorry, economic calendar. Oh yeah, it came out on Monday. So this meeting minutes actually came out on Thursday 18 lah. Okay, Thursday 2 a.m. lah. So Wednesday midnight, Thursday morning, up to you how you want to take a look at it lah. But this meeting minutes is actually it is a meeting minutes for the June FOMC meeting. Okay, so most likely whatever that is being discussed here, right, it is something that happened in the past lah. So you are not likely to see any kind of big movement from meeting minutes, but the meeting minutes is also it's a good time for the Federal Reserve member to like kind of update something if they are if they want to update something lah. And there's another thing that's happening next week, and that is Jerome Powell to speak on August 26th at Jackson Hole conference. So this is quite important, because if he start to say something if he start to say something with regards to whatever interest rate decision that they are going to make, right, then it might suddenly affect the market, right? It might suddenly cause the market to U-turn, or like, for example, it can spike up or spike down, okay? But this date is something that we have to watch out for also, so do be careful. So as I was going through the Federal Reserve meeting minutes, there's nothing new lah. There's nothing new that has already been said lah. But there is a few things that I want to point out, and that is meeting participant noted that 2.25 to 2.50% federal fund rate is around the neutral level that is neither supportive nor restrictive on activity. So currently the federal fund rate is at 2.5 lah. Okay, so when we say 2.5, right, it is not exactly on the dot 2.5. You have to note that federal fund rate is a range. So it's 2.25 to 2.5, but we usually just say 2.5 for the sake of simplicity lah. Okay, so the federal fund rate is at 2.5%, and the meeting participants say that this 2.5% is what they call the neutral rate. So this neutral level is something that you probably hear on Bloomberg or CNBC or a lot of other meetings also lah. So what this neutral mean is that if Federal Reserve put the federal fund rate at 2.5, right, it is neither boosting the economy or restricting the economy. It is simply neutral. So for example, if the economy is bad, like back in 2019, right, the federal fund rate was actually at 2.5%. Okay, so back then, whether they want to call that neutral or what, I don't know what they were calling 2.5% back then. But back then in 2019, the federal fund rate was at 2.5%. In fact, it hit 2.5% somewhere around end 2018 lah. So what happened is, of course, in 2020, right? COVID-19 strike. So when COVID-19 strike, they cannot. They need to boost the economy. So in order to boost the economy, right, they reduce their federal fund rate above 2.5%. So what they are trying to say is that any level that is below 2.5%, right, it means that the economy need a boost because they are suffering some headwind, something wrong with China or some supply chain, whatever lah. Okay, but Federal Reserve need to boost the economy. So anything below 2.5 is considered supportive, is supporting economy. And anything above 2.5%, right, it is considered restrictive. Restrictive means inflation have gone out of hand. They need to restrict the money supply. For example, like the housing prices shoot all the way up. Now nobody can afford housing, those kind of stuff, right? Then Federal Reserve need to set their federal fund rate above 2.5% to restrict all these runaway inflation. Okay, so that is where they are so-called the mandate of price stability. They need to, number one, maintain price stability, meaning inflation at 2.0%. And also they need to ensure the so-called the strong labor market. So that is their dual mandate. But saying that right now in this current situation, saying that 2.5% is a neutral range, right? It is a little bit, I would say, I don't know if they are like purposely being dumb or what, but because if your inflation is at 8.5%, right, then a 2.5% federal fund rate is not restrictive at all because your the inflation is already gotten way out of hand. So 2.5% is not a neutral range at all. So I believe that when they came out and say that 2.5% is a neutral range, it is kind of signaling to the market that they are going to maintain at this level and the inflation will magically come down. And I believe now, I mean, looking back in hindsight, right, I believe that this is probably something that triggered the market to rally lah. Like the market probably think like, hey, Jerome Powell say now federal fund rate is at neutral already, so the inflation is gonna come back down or whatever lah. And it is also one of the reason that they don't really have a forecast anymore. They don't really have a guidance, but rather they say that they are going to look at incoming data. They are going to be nimble. Meaning what they are trying to say is, okay, they have achieved the neutral rate. So in the future, whether they rise or they raise the rate or they cut the rate, right, it is going to be dependent on incoming data. So is a little bit I would say too early to say, because we just have one reading, we just have one improved inflation reading, which was largely due to decline in energy prices, which is like from Jerome Powell himself, is something that they have no control of. They totally have no control of that. But there are food inflation is still very high over there. The rent inflation, and I think among these are the two main one lah. Okay, the rent and the food are the two sticky one lah, that like is going to be there for quite a long time lah. Okay, so it's something that is worth taking note. And another thing that they say is also some officials say that a restrictive stance likely to be appropriate in indicating that more rate hike is coming in. Okay. So with inflation remaining well above committee's objective, participants judged that moving to a restrictive stance of policy was required to meet the committee legislative mandate to promote maximum employment and price stability, blah, blah, blah. Document also reflected the idea that once Fed gets comfortable with its policy stand and see it having an impact on inflation, it could start to take its foot off the policy brake. That notion helped push stocks into a strong summer rally. So firstly, right, they need to see that the 275 basis point hike must have an impact on inflation lah. So yes, the latest reading came down, but whether or not it is contributed by the 75 basis point hike is totally another question lah, because mainly it was contributed by the energy prices coming down lah. And the used car sales price were coming down also, but it didn't contribute as much as the energy and gas prices lah. Okay. So we have all those stuff going on, which kind of doesn't really paint a very good picture yet lah. We also have housing permit data also. Housing permit is something that is good to monitor also. It is actually one of the leading economy indicator also, mainly because if you have increase in housing permit, right, it is highly likely that the overall economic condition is very supportive of growth, because whenever people are building houses, whenever people are buying houses, right, there are hardly anyone that pay cash upfront. They are either using their equity as a collateral or they are taking mortgage loan. So all this kind of thing happening, right? Usually when building permits is in an uptrend, they are growing, it is highly likely signify that interest rate is low, the money is cheap, things are going up, everything up. So it does points towards a I would say economy expansion lah. But when housing permit is going down, when people are buying less home, when people are signing for lesser and lesser mortgages, right, it means that there is less money supply floating around, or in fact it is quite harder to get loans and mortgages, meaning there is less growth lah. So building permit actually it has been declining for quite some time already, since the earlier part of the year lah. It is something that I personally monitor also. So it kind of peaked somewhere around December 2021, and then it has a huge decline in April and May 2022 like that. Okay. So although I mean overall it is still a big uptrend lah, but it is climbing down right now. So you can actually see right here that somewhere since 19th of January, 16th of December last year, it start to come down already lah. And I think it has always been declining since then lah. So it is quite a good indicator that you can take note of also. Okay, so we might we might see the first weekly candle, but I mean it is, even though it's the first weekly candle, right, I will say that I don't encourage anyone to suddenly like get aggressive in your short, because if we are that if you want to be that aggressive, right, we wouldn't be taking spread trade in the first place lah. We will just immediately short, but we do have to be slightly careful. Okay, we do have to be slightly careful, but we are probably gonna see the first sign of selling ready, and that selling have to be led by Apple lah, and Apple is still like, I mean, look at it. Everything is -2. Only Apple is like still surviving there, meaning by tonight, right, by tonight Apple need to like really rate. It have to be rate. It have to like close here. It truly have to like close somewhere around hopefully lah, okay, hopefully lah 168 like that lah, okay. You have to go all the way down somewhere here lah. So as long as Apple is up, the market most likely gonna be surviving lah, okay. And here, right, you can also see how the spread trade is actually taking place. Meta is 2.78, okay. Google is 1.98, meaning there's a 1% difference. So it means to say that whatever money that you have in your Facebook, you are gaining 1% more than whatever that money that you are losing from Google also lah. So that is the advantage of the spread trade itself lah, okay. The market is red right now, but when the market is green, right, you will also see that there will be this difference that is occurring in your spread trade. So it is a good tool to use when you are not sure, or when you are sure about something but the market is not really giving you any direction also lah. So when those kind of things happen, right, you can actually take a spread trade, and then from there you can go and figure out what's going on. And all the Foot Locker is up 21%. Oh my god. All the Bitcoin counters start to go down also lah, okay. And actually, right, if I see the first big weekly red candle on Apple, like not this kind, like really bearish kind, like this kind, like that, I might I might consider doing a option shorts lah, okay. Consider buying a put option lah, for a very small amount. But if I manage to catch the top there and it like go all the way down, right, I think that may provide a very good risk reward ratio lah. Since for option, right, I will limit my risk based on my option contract, and no matter how far it go up, right, it doesn't really matter lah, because the most I'm gonna lose is my option contract lah. Okay, you have Coinbase going down 8%. You also have MicroStrategy going down 9.5%. I believe DigitalOcean should be down also, since it is considered you can actually see the Google spread, the spread very green. Where is DigitalOcean? No idea where is it. Marathon Digital Holding also down 11%. All the Bitcoin counters starting to come down already also lah. And one counter I'm actually looking at to consider a short is also DraftKings. In the future lah, not now. So now I'm gonna just stick to the current spread trade that I have. I actually added I added additional short position on Facebook to tag with my Spotify radio. Okay, so this one just a FYI lah. And look at Bed Bath Beyond. This is like this is pure murder, man. This is seriously a pure murder. Like it. Like you imagine all those who chase somewhere. This is truly crazy. This is truly crazy. 480%. It's like, imagine someone who chase here, profit, and then imagine these people, they got greedy, and then like this gap up here, they don't exit. I think here is like gone case already lah. It's it's like a lot of people talk about all these crazy gain in cryptocurrency, where most of these cryptocurrency, right, is like you will probably get like, I don't know, 10 times, 100 times, like I don't know, Dogecoins probably was like 1,000 times, who knows. But if you play options on this kind of movement, I tell you the return is equally crazy. I think it's equally crazy as all those crypto stuff out there. This is truly madness. This is madness. Let's go back and see what's going on with Target also. I'm quite very, what should I put it, very interested in Target price, mainly because of the fact that they lost 90% profit. But one thing you have to take note about Target is that it's not a very volatile counter. I mean, except for this big drop, right? Most of the time, it tend to move very slowly, okay? It tend to move quite slowly. So another thing that I want to point out, even though unfortunately we have a loss on Home Depot somewhere here. This one, the original trade is out already, but I still think that the housing sector at some point, right, it can come back down also. It is just rallying together with the Fed pivot lah. Okay, because housing sector is one of the more I would say a sector that is sensitive to interest rates. So anything about Fed pivot lah, whatever nonsense, right? They will be the one that is gonna be more responsive towards the rally or what lah. Okay, but perhaps in this case, right, maybe we, instead of going for the housing sector, we can actually go for the forestry product also. This counter is something that my one of my course member, he managed to pick out, which I thought was a very good pick out. So Louisiana Pacific Corporation. So this is a, is it this one? Yeah, correct. So this is actually a lumber lah. Okay, they provide engineered wood lah. So mainly towards home builders lah. So they are facing quite a lot of challenges and quite a lot of decrease in demand happening also. So it is also a proxy for housing sector, mainly because if there are no homes being built, right, then the demand for all these wood product will be quite bad also lah. And in terms of chart wise, right, I think this chart is quite nice. This chart is quite nice. We have a very good resistant here with a lower high here lah. Okay, and it is kind of like at the earlier stage lah, at the earlier stage of the rundown sell down, compared to, let's say, the housing sector, right? If we look at, I got too many stuff on my watch list really. If we look at companies like Pool Corporation, we got the earlier part, but now it has gotten quite a bit downwards already lah. Okay, I mean, if it falls, right, Pool Corporation can probably still continue to fall also, but I do prefer the Louisiana Pacific Corporation chart here lah. Okay, so this one I will KIV also. I will definitely KIV this when things are a little bit more clearer. Then maybe we can go for this also lah. So there is another spread that I am also considering, which is on a restaurant sector, and that is Domino Pizza. Domino Pizza short, but we pair it up with a long on the same restaurant sector lah, because we want to be super safe, remove all risks as possible. And the long that I'm looking at is actually, where is it? Texas Roundhouse, either Texas Roundhouse or Chipotle lah. Okay, but because both of this, right, already rallying up so high already, right, it is kind of a little bit technical wise, like I mean, normally when I do spread trade, I don't consider technical at all, because really you are not trading the technical at all when you are doing the spread trade, because market up or down, support, resistance get broken or what, right? It doesn't really matter. But the fact that both Chipotle Texas Roundhouse and the other one is Wingstop, which already rarely too much really is a bit something that I may not want to pair it up against with Domino lah. But we can also do a cross sector spread. A cross sector spread mean you do a long and a short on different sector lah. Okay, which means to say that I need to find a long somewhere else. So it is something that I'm still working on. And the reason why I do not want to how do I put it, pair Domino Pizza with Spotify long, right? Spotify will already have a long position, mainly because Spotify is slightly more, I would say, volatile compared to Domino Pizza, which make it a little bit hard to pair lah. Facebook is fine. Facebook and Spotify, they have similar volatility, but the difference between Domino and Spotify is a little bit too much lah. Okay, so if you have a very big difference in volatility, right, it's quite hard to do a spread trade also, based on the fact that one is a lot more volatile compared to the other. For example, you wouldn't short GameStop and then you long Google as a spread trade against GameStop. That's totally doesn't make sense now. Okay. And the other long position that I'm looking at, so this is a pure long. Okay, this pure long is not gonna pair up with anything, but I do feel a little bit bullish on this sector overall, which is the fertilizer sector, Mosaic. So for Mosaic, right, it does went up a bit high already. So what I'm actually waiting for is waiting for it to come back somewhere here lah. Okay. So the key level that I'm looking out for is this 49.26, mainly because this is the level where you have the deep buyer coming in lah. Okay. And somewhere in between here lah, between 51 and 49. So if let's say price fall between this area and then you see buyers coming in, right, then yes, I think I will be buying it somewhere here and then place my stop loss below this this green line lah. But until that happen, I think this one not that safe to go in for now lah. Another one is all the aluminum counter, which aluminum counter, right, I think is something that overall beyond a larger time frame, right, I'm actually quite bullish on the overall sector. I think all the EV stuff, right, like now government 100% support already, or all the tax rebate lah, this and that lah. So that there will definitely be demand for a lot of aluminum in the future. So this is coming from investment perspective. Okay. So going forward, maybe in the next 10 years, right, I think a lot of aluminum counter, they will do very, very well. So I will probably do a little bit deep dive. Maybe I can present that tomorrow if tomorrow morning, if I have the time. Okay, because sometimes it's not like I'm not planning or what, but sometimes, right, I tell myself that, okay, I want to research this counter. And then morning when I research, right, it turns out like, okay, I can't research this counter in half a day. I'll probably need like 2-3 days like that, because they are simply too much information lah. So sometimes you can't really until you dig into this company, right, you will never know what you'll find lah. And so sometimes when you dig here, dig there, a lot more things start to come out, and then end up it's already like 6 p.m., 7 p.m. like that, and then I can't get ready in time for the webinar also lah. Okay, so I will look into it. There are two counters. One is this one. I have no idea how to pronounce that. The other one is Livin. Okay. So these two counters, they are lithium production, and the other one is LAC, which is, I believe, a little bit more well known now. Okay. This one was a little bit more well known. I believe LAC was one of the counters that I posted even way before Patreon started, way beyond Patreon started. It was somewhere here, I believe. And then there was one guy who managed to get this whole stretch, and then he was super duper happy about it. He was like keep texting he was keep texting me every day lah. But I mean, even then, right, even then, from this point until now, right, we are still, the price is still above there lah. Okay, above this higher lah. Even though it up and down by a very big magnitude. So there are these three counter available lah. So within these three counters, right, of course you want to look for the safer one lah, the safer one that you can hold. But I believe that LAC is a little bit more speculative. There are a lot of punters in this counter which is not present in the other counters lah. Okay, so we can look at this in both situation, in from an investor perspective and from a trading perspective also lah, because I believe regardless of which route we are going to take, right, I still have to dig into this counter regardless. So let's say if let's say everything on this counter looks good, right, we can not only invest, but we can probably buy the dip somewhere lah if we decide to create a higher low somewhere lah. Okay, but obviously right now this is too much really. Previously I was looking at it somewhere here, then after that things got extremely bearish, so I remove it out of my watch list, which is something that I have a bad habit, mainly because when the July CPR data came out, everything was like initially price drop lah. So when initially all the price dropped left and right, I was like, okay, on sweet liao, everything bad. Then I just remove all the long position, potential long from my watch list. And then after that, all those long when the market start to U-turn, this one was not in my radar already. But it is one of the counter that I was looking at sometime around here. So this one can KIV, this one ALB, and the other one is this one LTHM, lithium. Okay, Home Depot and Lulu. This one very good question. Home Depot maybe not. But we shall see how. Okay. So we actually took Home Depot as a proxy for home builder sector, but Home Depot, right, I will want to see it fall below here first lah. Okay, I will want to see it fall below 310 first. Definitely we can re-look at this, but I will want it to fall below 310 first. Home Depot also have all the supply, the what do you call that lah, the oversupply issue lah. Okay, and all the usual inflation stuff that Target is facing also. So this one we can consider also. Oh yeah, Home Depot is also one of those counter that like things are doing quite bad, but they reinforce their year-end projection, and after that now they are doing share buyback. So because of that, things are a little bit more spiking upwards lah. So rather don't get married to one particular counter. So for example, right, Home Depot is because we are targeting discretionary retail that is related to housing lah. Okay, so as long as we get something that is related to housing, right, it is good enough. It doesn't necessarily have to be Home Depot. Same thing for Lululemon also. It is a discretionary retail, but it is more on the apparel side. So instead of going for Lulu, right, we may go for other apparel, other other discretionary counter lah. It doesn't necessarily have to be Lululemon, but also because now as things move forward, right? Maybe some charts are better. Some now that some earnings came out, also maybe some company are more weaker than we initially thought. So yes, if you are asking from the perspective that do we still want to short housing related discretionary counters? Definitely yes. Do we want to short any consumer spending related like apparel? What? Also yes, but whether it will be Home Depot or Lululemon is another question lah. We may aim for other stuff instead lah. Okay, but we definitely do have these counters in mind. For example, we may actually go for RH, which is similar to Home Depot, or we can also go for floor and decor. Which is also something like Home Depot like that lah. But they are similar in business structure lah. LNG yeah, LNG okay, unfortunately LNG is one of those counter that hit and miss lah. Yes, we initially have that position, but after a long while it was hit with a cut loss, and then after it continued to rally, right? I think at this stage, right, even if we are bullish, it's already gone too far already lah. Okay, so normally these are the kind of trade that we definitely want to avoid the most. For example, it is those trade that we took a loss, then after that it rally upwards lah. But most of the time we encounter this kind of trade maybe like three, 4 times a year, 3-4 times a year like that. So like we just let go lah. We don't revenge chase this lah. Even though LNG generally is, I mean, I'm referring to liquefied natural gas, not this counter, is currently huge in demand. The LNG price spike up by a lot, which caused this counter to rally up like crazy, even though during the same time oil prices are falling. So because of this, right, it does lead me to believe that actually we have chosen the right LNG counter, the right liquefied natural gas counter, because it is the only one of the few counter that is like hitting all-time high, rallying all the way up compared to other counters. Like for example, Range Resources also have exposure to liquefied natural gas. I believe Cortera also have, but they are not as strong as LNG lah. So it does kind of support the original choice that we chose LNG as the choice for liquefied natural gas exposure. So it means that the fundamental were correct, but our trade setup were wrong lah. But that is to say that if in the future, right, if we have any other kind of liquefied natural gas trade incoming, right, we can definitely go back to this particular counter lah. Okay, so maybe in this case, it's too late to chase, but of course we can definitely put this on our watch list to see in the future if there are any kind of more bullish sentiment on LNG altogether or not lah. Because the whole Russia, Ukraine, Europe, all the winter is coming, all this kind of stuff, it is still ongoing now. Okay, so I will not advise you to chase this long, but when it retrace, right, we can definitely take a look. UMS can long or not? Okay, UMS is those counter that if you ask me can long or not, right? I would definitely say yes, because it is one of the very few single stock counter that I'm holding long term. Like for example, I have a lot of STI ETF as my long-term portfolio. I basically dollar cost average lah. But along with STI ETF, right, I do have individual counters that I also hold, but not in a big amount. And one of those counters is actually UMS. Mainly because it actually provide very good dividend, and as long as you hold, right, you are pretty much safe lah. You are because the trend itself is quite good lah. Okay, the trend itself is quite good here. So, but of course now it definitely have gone up quite a bit already lah. So in this case, right, I will suggest wait for a pullback also. Wait for a pullback also, and then you can long on that pullback lah, okay? But the thing with UMS is that even though you are seeing what may look like a very aggressive rally here, right? Generally it is quite slow in a sense that it will do one rally like that and then it can stuck there for like 3-4 months and then it will do another rally. For example, you can see something like that here. For example, you will see one big rally here, then after that it stuck from April and then like one fake rally here and then all the way until May like that, like, and then after that it do another one. Then after that from here June, right, you will stuck there until like July like that and then it will do another one. And then if you sway buy here, then you will stuck for quite some time now. Okay, so it is a safe counter to hold for long term. In terms of trading, in this situation, you may want to wait for a pullback, and then when that pullback come, right, you can go for a long position, but don't expect those kind of very aggressive movement lah, because it is a counter that is a little bit slow in nature lah. Okay, and I think this is one of those counter that people are buying for dividend also. But I think currently dividend 3.97 is still good lah. It's still good. 3.97 is still, I would say, above average lah for a non-risk counter. Yes, Kelvin, will do. Thanks for the reminder. Samudara shipping coming back up also. Okay, minus 51 already. So we are looking at a bearish weekend now. Okay, we are looking at a bearish weekend. You can see here Google 1.76, but Meta is 3.29. So this is the kind of how should I put it, the kind of price action that we want. Whirlpool is down. Let's look at the banking sector. Marriott, Shake Shack is down. Okay, Etsy is one of the internet retail shops that I'm looking at also. On my top list lah, okay. But at this stage, I will rather do a spread trade for this also with something else, rather than just going for that alone. So for Etsy, right? Wait, I'm actually finding one counter. Where is it? Oh yeah, Lucid Group. Lucid Group also start to go back down already. It is one of those counter that like doesn't rally as much as the rest of the counter lah. How is Rivian doing? Let's look at Rivian. Rivian also starting to hit back down already. Okay, so we have Under Armour here. Under Armour, Whirlpool. This is Wynn Resort. McDonald flat. Wilma. Wait, let me go and find Wilma. Where's my Wilma? Are there? Wilma, you can try. you can. Yeah, I mean it does have good dividend, but I don't like the I I I am not really a, I mean, to be honest, I'm not really a very big fan of Wilma because it has the it has a habit of getting stuck for a very long time. Like it was stuck within this range, right? It was stuck at this range for don't know like 10 over years. And then if they want to start, right, it doesn't just like stuck there. It like to do this kind of stuff. And you can see that even here, right, want to rally upwards, don't rally nicely, it whip everyone out and then it start to rally. So for example, right, this is, yes, obviously very good support. Pascadi will do this kind of thing, it's a very not a friendly counter lah. It's not a friendly counter. like so sometimes I will like look at it and then like see what people are saying, look at the earnings a bit, and then look at the overall situation a bit, and then things seems like okay, like I can probably trade this, then and end up I was hit with a loss simply because it decided to be funny. Like it tried to do this kind of funny things. Like for example, right, like yes, you can definitely get a very good trade in the earlier part of 2022 here lah. Okay, I I think the first time I give out a Wilmer trade was here, this one. Of course, the very first trade it didn't hit the stop loss lah. But even though it didn't hit the stop loss, right, it actually went down before it went up. The stop loss was here, so it hits the origin, the TP one lah. Okay, this trade hit the TP one, but before it hit the TP one, it do this kind of thing, and this is a weekly candle. So either you are stuck from September until December lah. Okay, then of course, if you are the smart guy, you long here, then I mean it works for you lah. But most of the time, I don't have a good personal experience with Wilma lah. To be honest. AEM same as Wilma. Yeah, I think this one is some I think this is a lot more personal in a sense that, for example, if you get in on the counter at the right time, right, then yes, you will definitely feel good about the counter lah. For example, like when we talk about Wilma, let's say if you are the guy that managed to, if shit, why the chart suddenly different? Okay. Am I looking at the right chart? Okay. Yeah. Like let's say if you are the guy that happen to buy here and then shoot out, you'll definitely feel good. Or if you are the guy that bought here after this whole thing, then you will definitely feel good also. But there will be a lot of people who got caught who got caught here also lah. So because of that, right, you will end up like asking yourself the question, like, should you wait it out? Because if this kind of things happen, right, then you'll get caught. So should you wait this out, like let Wilmer do his stuff first before you enter and then wait for it to rally again? So my general experience with Wilmer not that good, but my personal experience with AEM is also not very good. Also not very good. Mainly because most of the time, there were 2 times in 2021 I got caught AEM at the top there lah. One here and one here and one here lah. So my personal experience with this counter also not very good lah. And then next the next time we did have a trade setup, but the trade setup wasn't triggered. Thankfully, it wasn't triggered because it was a long position somewhere here, and then it went out all the way down. Yeah, so sometimes when I don't have good experience with certain counters, right, I tend not to look at it. For example, I would rather play Bumitama Agri than Wilma. It does, for example, it does seems a lot friendlier. It does seems a lot friendlier compared to Wilma. Or even Golden Agri also a lot friendlier. Yeah, AEM definitely need a very wide stop loss, but actually AEM back in 2020, there were a couple of good trades that I was able to get, but that was way back in 2020. I mean, in 2020, it's like if you are trading in second half of 2020, right, everything you buy is a win. And anything you buy is going to be a win. So actually the whole 2021 and 2022 is how much of the win are you hanging on? Are you able to maintain? S&P going minus 51. We can take a look at what Nasdaq. So Nasdaq is 1.88. S&P is 1.21, meaning to say that the tech sector, yeah, correct, definitely, yes. Fade lah, yes. The tech sector is the one driving. We have Dow Jones not so down, mainly because it's the boomer index. Not, you have counters like Coca-Cola, McDonald's up there, and those counters are they don't move a lot, okay. Fastener also rarely like crazy. This one rarely like so like almost this rally is a very really one of the crazy irrational rally lah. And it will not be the first kind of rally that you will see also lah. I mean in a bear market. 1.78, 5.34. So you can see now Meta is dropping twice as much as Google already. Okay, so that's how spread trade works lah. If you are able to find the correct pair, if you are able to pick the pair properly lah. Okay, let's go and look at Wall Street Bet. Definitely a lot of BBBY stuff. Definitely a lot of BBBY stuff. BBB mega dead for Friday. New eggs are weak as shit. Fire sale for BBBY. Stop crying. You guys realizing making posts about it's not over, we can still do this, is so backward. Nothing has changed. Bring back the BBBY. Holy shit. Oh my god, look at that. 2 million. From like imagine you are this person. Imagine you are this person. You have $2 million and then you double that, you make it become 5.4 million. And then after that, it become to break even at 2.1 million. Okay, it's not break even lah. You are losing $900,000. Okay, and then now it become a net loss of 1.1 million, meaning you lost $3 million. Like imagine the kind of emotional roller coaster that this person is going through. And I can tell you my personal experience on Wall Street Bet, someone with 2 million like this, right? It is most likely it is not disposable cash, meaning it is not those cash that they are fine losing. Most likely they sell their house or what. I think one of my course member posted Steven, that guy is selling his HDB to buy Singpost on one of the TikTok video. Like I don't, it's either he have one of the biggest insider information or I don't know, like I mean if you are if you are the super duper gambler YOLO, right? You sell your house, you go and buy a GameStop. That is understandable because you are like, okay, it is all or nothing. All or nothing. I liquidate everything. I YOLO GameStop. If I YOLO GameStop already, if it shoots up, I retire big. If not, I become beggar lah. I become homeless lah. Okay, but you sell your house and you put in SingPost, which is like, huh? So if you want to say that, okay, you don't want very risky nonsense like GameStop, then why put in SingPost? Put in DBS lah. Put in DBS or something else. Why SingPost? Let's look at SingPost. I think SingPost is big enough that SingPost is, I mean, 1.4 billion market cap for Singapore is considered quite big. I would say that this is not the kind of counter that you can easily pump by social media alone. I mean, companies like GameStop, right? The market cap is very small. When it was like $10 like that, the market cap was very small. And there were a lot of short position, which can become very big short squeeze. And not only that, you have Reddit. Reddit is one of the biggest chat room. Okay, you have a lot of people down there. And then you also have the Roaring Kitty, who have a very big follower that is like in millions, like not just like Singapore market alone. Like the participation is huge lah, but it was also triggered by the short squeeze and the overexposure on the hedge fund also lah. So there's a lot of stuff going right for GameStop, but for counter like SingPost, right? Like the liquidity is quite bad really. You can see from the candle itself lah. Like this kind of candle is how should I put it? It's a sign of very bad liquidity lah. Meaning like it's not the money in and out is not so much. Where's my volume? Sorry, I want to see my volume MA. Okay, SingPost has a average volume of 2.14 million per day. 2.1 million shares per day. So 2.1 million is like, okay, 2.1 times 0.620. Meaning that there is about 1.3 million worth of simple share trader every day lah. Every day lah, okay, every day. And you can see that every day the price move about one pip like that. Meaning if you have 1.3 million on hand, right, most likely you can move SingPost by one pip lah. So from 0.620 to 0.625 lah. So it is not a counter that can be easily pushed also. I don't know lah. I don't know. It seemed very weird. It seemed weird. Okay, if I am gonna sell my house and I am in that YOLO, right? That YOLO mode, right? And I want to put my money on something, right? I'm gonna put on Apple shop, Apple put option. I'm just gonna dump everything in Apple put option lah. Either I become homeless, go back to Myanmar, or I will buy a good class bungalow here lah. But one thing I will not do is I will not put on SingPost lah. SingPost announced 1H loss. Oh, 47% parcel losses. Actually, SingPost is one of the saddest counter. It's actually one of the saddest counter. I was a very big fan of SingPost, you know. I was like a very big long-term investor of SingPost. I actually had SingPost all the way from the initial Alibaba frenzy. I believe it was somewhere here. somewhere here like that, or somewhere along here, somewhere along here. I forgot which day already, but it was during my earlier part of my trading journey where I was a very, very big fan of Simples, mainly because there was a huge rally, and then back then, right, their dividend was quite strong. They were one of the company that is listed on Singapore that consistently increase their dividend, and they have not cut their dividend at all, and they were able to consistently pay out their dividend. So back then they were paying quite substantial. Now it's 2.86%, but back then it was about, I think, of 6 cents per share, or 7 cents per share. I forgot already lah. And then I held this counter from, like, I believe 1.2 something, around here, 1.2 something. And then I held all the way, and then eventually I cut off somewhere here lah. I cut off somewhere here. But I mean, trader perspective, yes, it rebound, but I mean, back then I was holding this for long term lah. And thank God, because after that it went all the way down. So I mean, I have a lot of opportunity to exit, but I didn't exit. But I mean, overall, still profit nonetheless, and then collected a lot of dividend. But it was like, it was very sad, mainly because they were in a very strong position to transit into this e-commerce. Like, they don't really need to let other company like Grab go and take over the entire delivery service area. They were already in a very, very strong position, but it seems that the management there very stubborn, like quite similar to all the telcos management also. They are very stubborn, like don't really want to innovate, take the risk. But I think it is also mainly due to the fact that most of these companies are a lot of government interest lah. I mean, I'm not quite sure lah. It's on the conspiracy side already. So due to the huge government interest, right, they naturally don't take a lot of risk, or just, like, I don't know, and then so much market share that is being lost lah. Yeah, correct. Especially, Ninja Van and JT. At least, I mean, if they want to let Grab take over the taxi and the delivery stuff, right, it's fine. But at least, like, they can fight with, they can definitely, like, get control of whatever Ninja Van is doing, or Lala Move, or whatever lah. I'm not sure how much. I'm not even sure where are they earning money from. Like, the stamp is gone, or I mean, the stamp is almost becoming completely obsolete now. So I think they are just post and parcel, but they don't really have the range of UPS or FedEx or on those levels. So it's just a dying company that is, like, on life support like that, just waiting to die lah, or just waiting to get privatized, like M1 like that. Google Meta doing quite okay. Speaking about Grab, hey, I want to see how Drag is doing. Previously, we wanted to short Drag. This is also one of the sad situation. Okay, this one is sad because we have no way to short this. There's simply no way to short this counter. We can't even buy put option because the put option is so expensive. But it is one of those counter that is like, one look ready is 100% chop will go down one lah. But just that there is no, there's no instrument to short this counter. sorry, just now we were talking about this and sidetrack. But yeah, I mean, you put yourself emotionally in this kind of position is like I can't even bear to think about it. 2 million become 5.4 and then become negative 1.1 millions. Oh, there was another news that is like all over YouTube. Michael Berry sold off his entire portfolio. His entire portfolio is now empty, aside from this one stock, which is a private prison stock. So, but that was his July update lah. So that position was at the end of July lah. So sorry, at the end of June, quarter two. So now it's already like 48 days like that. So we don't really know what his position, but I mean, Michael Berry is someone that I like to listen to what he have to say, but I don't necessarily like to follow him also, mainly because he's too perma bear already lah. He is like way too perma bear already. It's like when everything is going everyone feeling good, he is that one guy that will like a cold like a wet blanket like that. Citadel borrow 600 million to deal with volatile market. Every single every single post is about BBB1. Every single post is about BBB1. Let's come back here to see what's going on inside. Smoke clear. Looks like BBBY found the bottom, right back to where I was last Friday. So this guy is thinking about buying it. Tesla need a decent cut. Stock split pricing. Oh yeah, Tesla is going through stock split soon. When? I think it should be next week. Is it next week? Yeah, 24th. Okay, I'm gonna put a alert here. But I am quite serious about buying a put option on Apple, but it will be more of a speculative put option. I will probably not post it as a actual trade setup because it's slightly speculative. Where I think it's very speculative, it's extremely speculative, but it is one of those trades that is for example, I think Apple option price, because Apple is $172, right? I believe the option price should be quite cheap lah. Should be quite cheap, somewhere around, I don't know. Let's take a look. Expiry, let's go for October. Oh, too far. Okay, this is call, this is put. Okay, so Apple put options are at $6. So this is for October option. So $6 meaning one contract is about $650 lah. Okay, so if you buy one contract, it is a $650 or $655 here. So meaning to say that if you buy one contract, it means that your minimum risk is $650, which means to say if the option goes to zero, you're gonna lose the entire $650 lah. So that's the risk lah. That's the minimum amount of risk that you have to take. If $650 is a big risk to you, then most likely the trade is out of the questions lah. Okay, but let's say if you have a large enough account and $650 is a good risk for you, right? You can actually play the put option. And let's say if it does dive down after September. So sorry, this one I was looking at October, right? So the reason why October is because we want to give it time for the next earning sheet. The next earning is in November, but never mind, we want to at least give it time for the September FOMC lah. Okay, September FOMC and the September CPI data where market actually moved the most. So at least there are a few key events that can cause the price to move. And if the price does indeed move and it can go back down to like 150, right? Like even a 50% retrace, which I believe is quite I would say is not too far-fetched. I'm not asking for this to go down to like $100, or I'm not even asking for this to go down to 120, but if it does retrace back to 150 level, which is somewhere before all the CPIs rally take place now, okay, then actually that $650 contract, right, it can become like close to depending on the time that it hit, it can become close to like $2,000, $3,000, $4,000, somewhere around that level lah, about 400 times or 500 times, somewhere around that level lah. I mean, that's basically how option works lah. So you have a very I would say a very good risk reward ratio with options. And the good thing is that if it decide to rally up, right, then no matter how high it rally, the worst you are going to lose is the $650. You won't lose more than $650. So the downside, of course, not everything is upside. Okay, the downside to option is that you have the expiry date, meaning by that expiry, right, your share price must move. If it doesn't move, right, it will become zero lah. Okay, so for example, in this case, excuse me, in this case, let's say I put a strike price at 170 and my option price is $6.50. It means that my break-even price is 170 minus $6.50, meaning it has to go to 163.5, meaning Apple must hit 163.5 by that date. Okay, by this date. Of course, yes, you hit the strike price, but you need to account for your option contract also lah. That's why we need to minus off. So if let's say if by your expiry date Apple does not hit this level, right, then your entire contract is going to become zero lah. So there can be a few situations that can occur. One is that you place a put option, and then after that, your analysis is correct. It went all the way down, okay? And then it starts to go sideways, and then your option expire becomes zero, and then after that, it continue to go down some more. Then in this case, right, you were right in your analysis, but your option expiry is wrong lah. Then you're gonna lose your option contract lah, even though you made the right analysis lah. So let's say in this case, right, if you instead of playing option, you put a short sell and then put your stop loss here, then you could have hold on to the short sell and then get a very big profit lah. Or you can just exit with some profit there. But for option, it's a different situation lah. Okay, so that is the pros and cons of options lah. But the pros is that, let's say you short sell here, then you stop loss here, then it goes up like that and then come back down like this, right? Then your short position can get taken out lah. Okay, I mean, in terms of short selling wise, maybe at this level it is still considered quite dangerous. It is still considered very I would say picking the top lah. Or for some reason, if this one decide to rally upwards, then you're probably gonna exit your shorts lah. But if you are holding options, right, you can still continue to hold. But it's some if after a while it come back down, right, your risk is not affected lah by how much it goes up. So it removes certain part of your risk, but it also add additional risk on the timing wise lah. So normally when you buy options, right, this is just general options guidance lah. Okay, not strategy, not tips, but just guidance. You want to at least hold your option long enough where you are covering a few events that can trigger a price move. For example, perhaps you may want to cover your earnings. So for example, in this case, it might be better to buy options towards end of November, because let's say if price decide to stagnate, and then after that earning it shoot all the way down, then yes, you probably want to buy an option expiry that is beyond your earnings lah. Okay. So some of the key events are things like CPI, FOMC, all this. So make sure that at least your options expiry can cover those period lah. And it is good to buy option before those period also, because when those periods are very near, right, your option price will actually shoot up because it is adjusting for all the incoming volatility lah. So it is a very, what's that? Oh, it is a very simple. These are very basic option stuff that you have to take note of lah. And in the current situation that we have right now, right, I don't really want to encourage complicated option play also, or any kind of YOLO option play. But once in a while, right, if I believe that certain counters are hitting the top, but it is risky to take a short position, then maybe I can suggest put options lah. One good example is like plug power. If you have a put option, right, it is a lot safer because I mean we are picking the top. Maybe it can go up some more, but eventually come back down. Okay, so if you have options on plug power, I mean in this case it is definitely a better choice lah. You can continue to hold lah. W are the weekly one. They are weekly expiry. So option generally follow a fixed expiry calendar. But aside from the fixed expiry calendar, right, you have all those weekly options that expire every weekly. For example, this is the fixed option calendar, meaning you will see most of your option expiring on this day. So option stop trading, the blue color is option expire. Okay, so when I was looking at this one, right, October 21st, this is the so-called the normal options lah. It expire on October 21st here. But all those with bracket W, right, meaning they are expiring on every Friday, I believe. So they are the weekly expiry lah, which usually for people who want to YOLO lah, I don't know lah. I think Tiger don't really allow weekly option, if I'm not wrong. Even though there is W there, right? I think some of them you can't really trade. Tiger options, I'm not really sure how they work also lah. It's a bit confusing. They have their own way to manage also. Kind of stuck there, still stuck there. who knows towards the end of the day what will happen. But I am a little bit glad to see Apple minus 1.26%. Apple definitely need to come down, because I think this is something that I mentioned before. Apple is now, I mean, you think about this. This is the level, huh? This is the level where interest rate previously was at 0. Maybe here it was 0.25 lah. We are back at that level. But now, right? Now we have 2.5% already. On top of the 2.5%, right? We have a big decrease in their sales number. We have the first operating income loss. Not loss, sorry. First operating income declining, which is considered a very, very, I would say, a big thing lah. But like what I mentioned earlier, right? Apple was one of those first few companies that, like, even though they are facing a lot of challenges and headwind, they are one of those companies that upfront announced, okay, we are facing this and that, but we are still reiterating very strong growth in the second half lah. And I mean, on top of that, plus all the other Fed pivot, whatever stuff is going out lah. And I think when this kind of rally happen, right? Apple is the big name where people will run into for safety, mainly because they have one of the largest share buyback, and also Berkshire hold a lot, like their biggest component of their portfolio is Apple. But given their current price right now, I think this price doesn't really justify lah. So I will be happy to see this go down somewhere around at least by 50% like that, at least until this gap lah. Okay, at least until this gap. If things are super bearish, then if it go down some more, whatever, that's another story lah. But at least until this gap. So what I mean to say is that even if the market is very bullish, right, there should be a pullback, and when that pullback happen, right, at least Apple should retest this level lah. Because if we decide to do like this, I think this is kind of like, I wouldn't say impossible, but improbable lah. Kind of is a little bit improbable. Yeah, correct. Those with W tend to have the spread is quite big, because options are very cheap, right? Options are very cheap. Whenever you buy options, right, you have to take note of the spread, okay? Because the spread in options is actually quite a big deal, quite a very big deal. For example, just now we were looking at October put options. Okay, because Apple is a very famous counter, so the spread is still all right lah. But if you are looking at more ulu counter like Whirlpool, let me put to a nearer date lah. Okay, September 23. You can see the spread is $1 apart. You know, the bid price is 350 and the ask price is 4.5. It's $1 apart, meaning you are $1 is like at this price, right? $1 is about 25%, meaning you are giving up 25% of your profit on the spread alone. Of course, this is just buy. When you sell, right, there's the sell side spread, which means you are giving up 50% of your of your profit on the spread alone. So you have to be very, very careful of the spread. Like, for example, this one is a lot better, but not better by much. 10.1 and 12. But this one is like open interest only 2. So better not touch lah. Better not touch. 52.66%. I think previously here they also have a 52.66%. $4.75. So they are going to pay out $4.75, which is about 10%. I think this one last time there was some I think this one Jack, you know or not, you are the Zim expert. Wait now. Let me go and find. Dividend yield 52. Is wait is my chart dividend adjusted? I think my chart is dividend adjusted. Adjust for dividend. Yeah, there was a one time dividend payout. This one need a little bit of research, because sometime you will see the dividend here very high. It's mainly because the dividend here is reflecting the past 1 year lah, okay, or I think it's past 1 year lah, FY, the previous year dividend lah. So it can happen that in the previous year, right, in the previous year they probably sell off some of their asset, and then they give out the asset as a big one-time dividend, so which can lead to a very big I would say a very big dividend year lah, for that particular year lah. But in the following year, right, they are not really going to do those kind of stuff anymore. It can be those situations. I'm not really sure if Zim was in that situation, but it is worth finding out what is contributing to this 52%. Like for example, this year, right? This year they give out they gave out $17 here. They gave out a $17. And then after that they give out $2. And then next they are giving out $4. So I think Zim itself is a very high dividend generating counter lah. But I think this $17 here is there was some one time sale something lah. Have to go and find out. But back then, right? Back then in the earlier part of the year, I do recall reading something about it. It was due to a one-time sale or something. Then after that, it was like back to normal lah. $2, $4. Yeah, US stock. Please take note of the 30% tax. So that's why I generally don't like to touch high dividend counters in US. Like if people ask me why I do not trade utilities, right? The dividend is one of them lah. Because yes, you get the dividend, but then after that you are gonna get 30% of your dividend tax. I think today is generally health is green. Health is green. J&J, FV, LLY, Pfizer. Health is green. Utility is red also. Consumer durable. This is what? General Motto. General Motto is green. Must be earnings. Must be earnings. Only not earning leh. Oh, it restore quarterly dividend after more than 2 years. Okay. Okay, guys, it's 11:05 already, so I'll be stopping. But do take note that we are probably facing first sign of resistance already going into Jerome Powell meeting in Jackson Hole next week, and then after that CPI data in September, which is like it's still a while away, but I mean you close eye a bit, it's end of the day or it will come very fast. Okay. So yeah, things seems to be selling off already. And it is quite easy to sort of tell if this is a sell off from irrational rally or if this is just a normal dip in the long-term bull rally. Normally, if this is a very big sell-off, right, you will start you will see a very sharp decline that is coming down like this. If it is more of a, let's say if this is a legitimate rally and this is just a short-term sell-off, right, you will see more of like this kind, like a cup and handle, those kind. So like something like this, you'll probably see something like this. Wait, I don't think this is a good this one. You will probably see something like this. This kind where it get repeatedly supported. Okay. So if we start to see a lot of repeated support somewhere like here at the key level here, right? Then yes, maybe perhaps this is truly a true rally. But if it start to spike down, right? Like for example, every rally it gets sell off, every rally it gets sell off, very big red candle coming in, then maybe we might retest the low. So right now, don't YOLO full portfolio of shorts yet. Just do just employ spread trade, and then after that we will try to reposition wherever direction the market is going. Okay, but I'm still leaning towards more of the bearish side, but just that we need to take extra precaution because of the fact that the market is still, I mean, even with today's red candle, right, it's still considered a strong uptrend. It is just the first sign of crack showing. Whether or not the seller will continue to pile on top is another question now. Okay, so we shall meet again tomorrow. We will talk a little bit more about spread trade because I think it is good for discussion and other example of how you can employ and other situation which you can employ spread trade because it is best used during this kind of condition where like market doesn't really make sense and you don't really know what to do also, even though you have a good direction. Okay, guys, have a good night.